Hi, I'm Shourjya Bhattacharya. I am roll number 2401456, PGPM 2426. I will be talking about why NPAs or non-performing assets are a critical issue affecting the Indian banking sector. So we'll understand what NPAs are, why they have become a very big problem, the measures that we can take, and the challenges, and how to fix the issue. So let's just jump right in. So, firstly, what exactly is an NPA? NPA or a non-performing asset is a loan or advance for which the borrower has stopped making interest or principal payments for 90 days or more. From the bank's point of view, it's a loan that's not generating income. Essentially, it's turning into a loss. Now, coming on to, there has been three types of NPAs that has been recognized. One is a substandard asset, a loan which is overdue for less than 12 months. Next is a doubtful asset, which is a loan that is overdue for more than 12 months, and a loss asset, which as identified by the banks or auditors as a non-recoverable as loan. Okay, so why do NPAs matter? NPAs matter because essentially it reduces the bank's profitability, limits its ability to give fresh loans, and weakens the entire credit cycle of an economy. In India, the NPA crisis became prominent after the RBI's asset quality review, which was instated in 2015. And before that, several bad loans were simply hidden or restructured. Post 2015, banks were forced to recognize them, and the gross NPA ratio for public sector banks crossed 10% by 2018, and that's huge. And why did this happen? So, loans were given without proper due diligence, especially in sectors like infrastructure, steel, telecom, and many corporates overborrowed. When their projects failed, they could not repay. The twin balance sheet problem emerged: over leveraged corporates and stressed banks. It was a major issue. And also another prominent reason why the NPA crisis became such big, it was because the public sector banks also suffered from political interference and poor recovery processes. And even today, the largest share of NPAs is still with public sector banks. Next up, to tackle this issue, the government and the RBI have taken numerous steps, and I'll list down some of those in this video in the next section. So, first things first, the Insolvency and Bankruptcy Code (IBC) was introduced in 2016. It allowed banks to take defaulters to NCLT and recover dues through asset sales. Next was the establishment of Bad Bank. The government launched NARCL, a bad bank that buys bad loans and tries to recover them efficiently. Then again, there was recapitalization. The government pumped in capital to support public sector banks which were struggling with the whole NPA crisis. Prompt Corrective Action (PCA), a framework that limits the operations of weak banks to prevent further deterioration, was also established to ensure that NPAs as a whole also don't pose such a big threat to the whole economy. And lastly, there was the digital tracking of loans and better risk classification methods, which were introduced. And thanks to these effective steps, that the NPA ratio has declined a lot. But the risk hasn't been over, and there are certain challenges ahead that needs to be addressed as well. So one of the major challenges that lie ahead is the post-COVID stress. So during COVID, there were a lot of small and medium businesses which took moratoriums, and some of which may still default, adding to future NPAs. And due to the rise of MSMEs and rural loans, and as these sectors are highly vulnerable and repayment is unpredictable, it becomes a major issue again, and it needs to be properly tackled in the coming future. Coupled with that, there has been a slow legal recovery process. Even with the establishment and execution of IBC, there are many cases which have been stuck in courts for like years. And a poor credit appraisal system that is still prevalent in some of the banks also adds on to the whole problem of NPA crisis. Without proper assessment of the borrower's repayment ability, few banks still give out loans which creates a lot of problems for the whole NPA management thing. Um, Again, I think two couple of more factors that needs to be assessed properly, ascertained whether they pose a problem or not, is high exposure to risky sectors like real estate and telecom, which are already under a lot of financial pressure, and the issue of digital lending risk. With the rise of digital loans, a lot of fintech lenders have a lot of they have a very relaxed system, uh, which can also add on to the whole NPA crisis. Lastly, in conclusion, serious efforts have been made by the government and the RBI, but still, to tackle the whole issue, there needs to be proper credit discipline, faster legal resolution, and transparent governance if India wants to become a 5 trillion economy. And for that, a healthy banking system is very pertinent. And due to that, the NPA crisis needs to be managed well.